friend, my name is Chin. As you can see, I'm going to talk about natural gas trading strategy. Um, Apart from last time I talked about support and resistance impulse trading, I also have one or two slightly different strategy as well, which I'm going to explain very soon. So stay tuned. So let's talk about how we identify support and resistance. So in this example, we can have two situations. One is clearly have a going through a downtrend and then coming back up. Another one is um, beginning of a downtrend and how to identify the resistance. Some of you may know this already, but I'm just trying to make it a little bit more clearer for what I'm trying to explain before. So when it is like a double bottom before, you can almost draw a line there, and that will become your resistance when you are trying to long this position, right? You want to put a long position because you think it's going to be an uptrend. That will be your resistance. So another case is you form a double top coming back up, continues up. That usually will be your support. So when you're trying to short it, yeah, that will be your target. Usually that maybe continues going upwards by touching this line. There is also another situation which is quite common, and it happened today as well. Since we have a massive gap up last night and then a sell-off today, as you witnessed, there are two patterns that I've seen it quite often, and I like to trade up. First one is this one, where you see there's a resistance there, and then that yellow line is the trend. So it shows hesitation around the resistance, and then the EMA 10, which is the fast line, is going up still, and somehow it needs to negotiate with the EMA 10, so you can open a short position to target the fast line, and then once it goes beyond, it shows a very bearish candlestick, which is below the EMA 10. You can also have a short position because it's likely to be pressed down by this 10 EMA line. So let's see what I've done today. So I've done 6 trades, and it's a sell-off day really. So it was gapped up yesterday, and then we have a sell-off. So I have entered my FOMO trade for my first trade last night. So it gapped really high, and I just entered a long position, and of course didn't take any profit, and then it was a loss. So I saw it coming back up, and then I just sell it when it's pulling back up. You can see there's a sell off close position there. And then my second trade was here. I sell it here and then close the trade here. Why? It's because of this situation. This is on 2-hour charts. Resistance is there. Price coming down, coming back up, renegotiate to the resistance. Didn't do anything, so it is naturally going to touch the fast EMA 10. So as you can see, price is coming down. We negotiate to the trend line. Don't want to go past it. And so I sell it here to get close to the EMA. And then my third trade was here. I shorted it and then take profit here because it went below the 10 EMA, and then this pressure is going to push the price lower. And that's what it does. And then my third trade, as you can see, we have a resistance line here, and that's why I set up a limit order down this line, and then it come back up like a rebound. Like I said before, you throw a ball to the wall, and then you'll get the natural impulse to it. And there's another type of trade I want to talk about is almost my last two trades, and I was able to capture before, just after I opened a short position and just after I closed the short position. So you can vaguely see the 10 EMA is pointing down and the price is closed way below it as well. So you got the resistance pressure, you got the EMA pressure to push the price down. So every time there's a wick, 2 hours wick down here and bounce back up, guarantee it'll mostly just go back down. So on here, on a lower time frame, this is what I've done to it. When it is up here, I open a short, which is there, and then when it comes down close to the end of the wick, then I exited the trade. So that's that, and I will see you next time. Say bye bye.